This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks here in 2023, the first of the year. Gelukkig nieuwjaar, as the Dutch would say. Happy New Year to you, Alan. How are you?
A very happy New Year, Mark. I'm well, thanks. And yes, I understand you've had a fairly riotous time with your colleagues over in The Hague there.
Yes, indeed. I did celebrate my first ever Dutch New Year, which was fun. They definitely like their fireworks over here in this country. It's a little bit like a war zone from probably around lunchtime on New Year's Eve all the way through till about 4 or 5 o'clock in the morning, non-stop fireworks. And of course the peak around 11 through to 1 o'clock. It's just insane. There's just random fireworks going off everywhere, completely uncoordinated. Random fires on bridges, police turning up, people throwing little bangers at you in the street. But, you know, it's all part of the fun. I've had a great time. How about you?
Fantastic. Yeah. Well, we had 15 people here for New Year's Day, and for various reasons, I'm engaged in shall we say, a dry quarter one, and a big weight loss program with several family colleagues and a very old friend. We've had our January 1st weigh-in, and we're going to compare weights every Sunday.
Excellent.
And all the rest of it. So, but yes, it was a great New Year's Day, and of course I sat there not drinking anything and watched people slowly get drunk around me. So that in itself was great fun.
Good. No, that's good to hear you're on a bit of a health kick. That's always good, where we can have a weekly check-in of if you're happy to share your journey to inspire others, maybe to shed some of those pounds, because it is important. You know, health is wealth, as the saying goes. So
health is wealth, absolutely. And I think also, you know, just generally speaking, it's something I've been aware of for some time, and yeah, I'm now taking full advantage of it, and
good.
And I can say though, you know, not having drunk since just before Christmas, waking up every morning not having drunk anything at all, there is a discernible difference.
Indeed. Excellent. Well, good for you, Alan. Good for you. Okay, so we're going to talk today about Marula Mining and Cadence Minerals. We did actually talk about these, didn't we? I think Marula was actually one of my picks for 2023 for this year. And Cadence, I'm not sure if that was one of your picks, but it was certainly one of your picks from last year. So we'll get a bit of an update on what's going on with Cadence as well. But Marula Mining then, Alan, you I think you've done some research into that since we mentioned it. And of course it's had a nice little blip since then, hasn't it?
Well, what's interesting with Marula, you get some companies that really deliver on expectations and then exceed them by just adding more and more. And of course, we've seen, we talked about first class metals, what they've achieved since coming to market. And Marula Mining, really, when we spoke about them last year, the shares were, I think, worth, they're trading at 2.5p, giving the company a market cap of, I think, just under 2 million. Currently now, the shares since Christmas, or the trading period between Christmas and New Year, the shares leapt up to 4.5p, hit a year high of 4.5p, currently just off that at 4.4p, but it still gives the company a market capitalization of just under 4 million. And I think when you look at what the company have achieved, and also the pace of developments too, and this is always a telling factor with any company that you're investing in. The company will make a statement about the future for a project. How quickly do they deliver on that? How quickly do they tick those particular boxes? Well, in Marula's case, since we spoke, they've taken a series of quantum leaps, and that's really, I think, is accurately reflected in the increase in share price. But it still puts on a market capitalization of just under 4 million. So there's taking a quick look at the assets the company has. Of course, the company has the Blesberg lithium and tantalum mine, which is located in the Northern Cape in South Africa, and it's one of the largest pegmatite deposits in the regional belt in that area. Historically, there's been production of spodumene, which of course is the spodumene concentrate, which is the concentrate that from which lithium and other minerals can be extracted, and includes tantalite, feldspar, bismuth, beryl, and other elements. And certainly the due diligence that the company had undertaken on Blesberg has concluded there was a real potential to increase the spodumene resources there. Quick developments since we spoke about that, and that of course was when we first spoke about it in November last year. At the end of the month, the company announced that processing at that plant had already started, and of course this followed a $5 million prepayment from South Africa commodity group Traxys to purchase the high-grade lithium. So the company received the money, and of course they were able to reinvest that money into developing and getting the processing plant underway. At the same time, the company also raised £450,000 at 2p. So of course, investors involved in that share in that raise have now doubled their money more than, which is a pretty impressive result given the markets that we have now. There's also a further 265,000 issued in a convertible loan note to Brahma Finance, and the company is in talks with a number of funds in Africa to raise a further 1 million as required. But I think given the way Marula is developing these projects, I think they've got every chance of securing that money and at very favorable rates. So I said on November 25th, processing has started at Blesberg. Of course, they now have equipment on site. The stockpiles there are being crushed and processed already. There have been a series of infrastructural upgrades at the mine, and the company have also developed a stores and workshop facility in the town of nearby Steinkopf, from where they've also taken on 30 new local employees, and that's always great. I think if the company, I think, is obliged under South African law to employ many locals, and of course 30 new local employees from the regional area have been taken on. The company announced the same day that it has taken up the option to buy the Blesberg plant, so that's 100%. It will own that plant, so there's a huge value add right there. The plant's already processing ore and extracting lithium from that. So really, if you look at an exploration company, the process it has to go through to get to the stage where Marula is already at with Blesberg, that's incredibly impressive progress. But the company also has 3 other key projects as well. The company has, of course, the Nkombwa Hill niobium tantalum rare earth and phosphate project in northeastern Zambia. There's a JORC resource estimate there of 21.8 million tons of phosphorus pentoxide and just over 1.1% of total rare earth oxides. And those are based on samples from less than 5% of the area. So that's really exciting. There's a real opportunity there to develop a small-scale mining operation, of course, subject to permits and so on. So an exploration program is underway there to fully assess the potential, along with metallurgical test work to further assess and establish the potential there. October last year, heads of terms were signed with a company called Tequila Mining in Tanzania to secure a 49% stake in the Kanusi copper mining project, which entails 10 copper mining licenses in Tanzania. £50,000 worth of costs were paid plus 4.5 million shares at 2p, but the shareholders there were locked in for 12 months. And again, some great samples from the region, 7.2%, 19 to 12, 19%, 31.3% copper, and that's just using handheld portable XRF device. Is the company has said that the Canusi copper project has the potential to be Marula's second operating mine in 2023. So there's Blesberg, then there's Canusi, potential to bring that on stream. The most recent development from there, the Tequila mining team, along with representatives from Marula, are on site to conduct more in-depth assessments with key shareholders and also government officials. So there'll be more news from that, no doubt, very soon. So then the company announced at the end of November, heads are termed with another Tanzanian company, the Casina Gateway KGIP, to acquire a 73% stake in the Bagamoyo graphite project. The company has said it will undertake an initial exploration work there within quarter 1, so that's literally imminent in the next few months. This asset entails 22 licenses. There's a $500,000 minimum expenditure required, and of course, once the work there is undertaken, then further assessments can be conducted. But hugely exciting. So 4 key projects. So Marula's now got project interests in lithium, graphite, copper, niobium, tantalum, and of course rare earth metals. Significantly, the company announced on January the 5th, that was yesterday, that the share price had moved to 4.4p from 2.4p, and it attributed that move to the rate of developments across the company's 4 projects. And I think that movement, which although it's very encouraging, and obviously many shareholders will now be sitting on a decent profit, having doubled their money, but we're still scraping at the surface in terms of potential, I believe. And it's clear that shareholder Paul McGillen also shares that view, because on December the 14th, he increased his stake from 5.8% to 9.3% in the company. So we've already said that First Class Metals and a bunch of others are set for a huge 2023, but by the looks of things, Marula Mining could eclipse all of them.
Absolutely, it could. And I have been impressed with Jason Brewer there, really blazing a trail. He says what he wants to do, and then he goes and does it. And we catch up again on an interview, and he tells me he's achieved what he wanted to achieve. So really making tracks there for sure, and spreading the commodities over the different ones you've mentioned there, Alan, away from the near-term cash flow from the lithium. What a great way to position a company. I think just actually at the right time I mean, we talked to a lot of companies in this space who've been exploring or building packages over many years ready for this mining commodities boom, but I do feel it is very soon. Maybe we'll start to see it sort of the second half of this year, so good timing for Marula for sure, and spreading the risk there. Excellent work by Jason. So and indeed, still, as you say, very undervalued.
Yeah, well, it is. I mean, Jason, of course, 25 years experience. He's a mining engineer, first and foremost, and I think that's for any CEO to have that experience gives you the broadest possible perspective you could attain when you look at a mining project, and that's very important. But of course, also he's joined by Richard Lloyd. Richard Lloyd, although he's stepping down from the board, he's remaining involved with the projects at Marula. And Richard, of course, has many years' experience. He's well known within the mining industry. Non-exec Ian Hairbottle, Ian has worked as CEO of Gemfields and Tanzanite One, so masses of experience in the area. And of course, Mark Nally, non-exec experience in Zambia and across Africa. But I think what's the most important takeaway from this is that they have a producing mine, which they have an option now to buy 100% of. They're taking up that option. They already have a $5 million down payment. They've raised money at 2p. The shares are now 4.4p, but it's still worth just less than 4 million. There's a producing lithium mine in South Africa with the Canusi copper mine. that's potentially their second active mining or their second operating mine that will take place in 2023. So it's happening at a rate of knots. And I mean, it wouldn't surprise me to hear that the company makes another acquisition, given what they've achieved already. So I think for a company that's got a producing asset like this, the valuation is laughable, frankly.
Yeah, indeed, indeed. And of course, on the Aquis exchange as well, I mean, it has its pluses and its minuses, but I think in this case, it's a plus, isn't it? Because you can get in there and pick up the shares when perhaps other people aren't checking them out or looking at them. And it's not going to stop anything big happening. You know, if a material development happens in the company, the share price is going to move. It's not going to stop other parties coming in or buyout partners, that kind of thing. So in that sense, I think Aquis is kind of tucked away there, and if you can find a good company or two, of course, we've spoken about Altona before, haven't we? Altona Rare Earths, which are trying to move off the Aquis exchange. But yes, if you can pick up shares in Altona, I think around now, that's a pretty, it's not guaranteed, but I think that's a pretty good bet. You know, considering what Altona have got and how they're blazing a trail with their rare earths. So yeah, there are some hidden gems there on the Aquis exchange that are worth researching.
There certainly are, and I think Aquis is now coming of age. You know, I've said this before. Given the cost of listing on AIM and also of course main market costs now as well, with the minimum requirement of 30 million sterling market capitalization, that actually rules a lot of small companies or companies with small projects out. So Aquis is a great place to be. And now, of course, they have the electronic trading facility with their growth companies. That's changed everything. So I think the next few years are going to be transformational for both for companies seeking to list and also access capital via the market. I think Aquis is going to play a pivotal role going forward, and it could at some stage eclipse AIM. Who knows?
Indeed. Okay, excellent. Well, that's Marula Mining. So then let's talk about Cadence Minerals then.
Well, Cadence is a company that's listed both on Aquis, on AIM, and also Aquis as well. Mm-hmm. So it also has an OTC listing. Cadence initially set up as a mining investment company, and that's certainly still the case, but it has evolved dramatically in the past few years. So the shares are currently trading at just under 11p, giving the company a market capitalization of just over 19 million, which again I think in no way reflects the developments within the company's flagship asset, and also the investment returns they've secured on two other projects. On 30th December, Cadence provided a corporate update on its activities. I'm going to come to the flagship Mappa iron ore project in a second, but there were two key assets where the company has entered agreements to crystallize the value. It's in July last year, the company sold lithium technologies and lithium suppliers to a company called Evergreen. The terms of the sale included an initial consideration of 3.1 million Australian dollars or 1.77 million sterling in Evergreen shares, and a further 6.6 million Aussie dollars or 3.7 million in Evergreen equity on the achievement of certain milestones, and also pending an ASX listing. All of the boxes have been ticked. We're still waiting to hear to get the final approval from ASX before Evergreen comes to market. So that's going to happen anytime. Secondly, the Yangibana Rare Earths project, also in Australia. So Yangibana is operated by ASX-listed Hastings Technology Metals, and Cadence held a series of assets there across Yangibana, which is a fairly broad spread project where Hastings, for example, have received an Australian government loan to develop the project, because of course rare earths outside of China are few and far between, and this is a huge asset. In June last year, Cadence entered an agreement with Hastings to sell its working interest and tenements at Yangibana to Hastings Technology Metals. They agreed 9 million Australian dollars, 5.1 million sterling, again in Hastings shares. All the preconditions have been met, but they're awaiting state approval for the transfer of the mineral licenses from Cadence to Hastings, and I think that's going to be a formality, because of course Hastings owns the rest of the licenses within the Yangibana area, so it makes that there's logistically no reason for that not to happen. So what that equates to with the two is a sum of around 11 million sterling, the total valuation of the two. So if you take that into account, then given the current market capitalization, we've got basically 8 million sterling left, and that's the valuation that is applied. Firstly, to Cadence's interest in the Bacanora lithium project. That's the Sonora lithium project in Mexico. Cadence has an interest there in a couple of joint venture companies. That's Megalith and Mexilit, and of course, listeners will know that Bacanora is now owned by Ganfeng, the largest lithium company in China and in the world, I believe. And with the Megalith and Mexilit interests, it's expected at some point that Cadence will complete an agreement there, probably to move those assets on. There's been no news on that yet, but I'm sure, given that Ganfeng has taken over Bacanora, that process will happen in due course. That is my view, of course. There's nothing in the markets about that, so please bear that in mind. And then finally, we come to the Amapa Iron Ore project. The Amapa Iron Ore project is a project in northeastern Brazil, in the state of Amapa, and it consists of an iron ore mine, a railway, and a port. And this is the entire asset. Formerly owned by Anglo American, this was valued at $600 million on their books in 2012. Subsequently, the iron ore price fell, and there was also a port collapse at Santana, which meant that the tailings piled up at the port couldn't be shipped. So, of course, the company was then sold on, and was then sold on to a local company called Dev Minerals, or Dev Mineração, and that's the company that owns the business. The asset went into administration, and Cadence, along with some partners, put together a proposal in late 2018, early 2019, to buy the asset out of administration, and that involved a series of steps to secure agreement with the Amapa regional government, to secure agreement with the creditors, and also the banks. And the process took a long time, but that was completed. Cadence put together an agreement that with a proviso that provided all of the requirements were met, it would then invest into and take a stake in the project. That was the stake was to take place over a series of tranches, and it has now been it's now taken its stake up to 30%, and has first right of refusal to take the stake up to 49%. Meanwhile, the money that Cadence raised raised to go into the initial rebuild was supplemented by the restart of shipping. So a number of shiploads of the tailings have been shipped. There are international buyers all over the world that want to buy the project. It's good quality product, so there's a market there straight away for the asset. The port is being repaired, and of course the mine, the infrastructure, and the administration facilities have all been brought back to life. And there are plenty of photos on the Cadence website where you can see, and also on Cadence's social media accounts, where you can see the work that's been done there by the team on the ground. But of course, in order to bring it back on site, we've got to establish the investment case. And as happens with any investment case, in order to do this, we have to go through the process of reassessment, and that entails a pre-feasibility study and then a definitive feasibility study. On the 3rd of January, Cadence announced the completion of the pre-feasibility study, a post-tax project net present value of $949 million US, which consists of a profit after tax of $2.96 billion over the life of mine, with gross revenues of over $9.39 billion. That's over the life of the mine. So there's a maiden ore reserve there of 195.8 million tons at 39.3% Fe, which is an 85% mineral resource conversion. There's also, if you like, an X factor in the nearby Tucano mine. There's an exploration target being identified at the nearby Tucano mine, which is expected could extend the mine life and, of course, potential further capital savings at the port loading facilities. So this is a working mine. It'll be up and running again within a year to 18 months, and of course a working railway and a working port. So currently we have this NPV number that's established. The DFS work, the definitive feasibility study work, is underway, and of course the DFS will provide capex costs to complete the refurbishment of a lot of the works there. But bear in mind, the infrastructure is already there. A lot of it just needs to be renewed and upgraded in a similar way to, I guess, the Kiliba Pisa mine that Carousel Gold are working on in Kenya. It's a similar process, but this is a huge iron ore mine which already has products still waiting at the port to be shipped, and of course, the potential for near-term revenue generation is absolutely huge. So the Amapa iron ore mine and also the assets in the Sonora Lithium project, the market currently attributes a value of just 9 million, which is astonishing, given Cadence already has a 30% stake and is likely to increase its stake to 49% within the year. So very exciting year in prospect. We've seen a lot of movement already over the past few months, and I think there's going to be an awful lot of news flow from Amapa in the next few months, taking the project forward. And it looks to me now at 19 million that Cadence offers fantastic value for money.
Well, it certainly sounds like it, Alan. And the DFS, when is that due? Do you have any idea?
Well, the DFS is already underway, so I imagine that will take another couple of months. But
Okay.
but the completion of the PFS, of course, is that's the first stage. But the Wardell, the team, and the other local companies working there it means, of course, that the PFS is completed, but the work for the DFS runs alongside that. So the team are already well into that. So I imagine we're going to see that advanced, and we'll have news on when that DFS will be published. I imagine in the next month or so.
In the next month or so, we'll get news on when it's expected to be published. Okay, good. It's always a big milestone, isn't it, when we get the DFS out? But the PFS. Well,
the PFS, that's what I'm saying. That was published on the 3rd of January. So if you to take a detailed look at that. So if you're looking at the investment case, this is where the upside from Amapa is. We've got the established revenues of 11 million from the sale of Yangibana and the listing of Evergreen Lithium. So that's established. You've got 11 million sterling there. The upside is going to come from Amapa. So if Cadence goes up to a 49% stake, Anglo American valued it in 2012 at 600 million. The PFS that came out upgraded the maiden ore reserve estimate by about 25 to 30%. So there's an increase in value over what was there back in 2012. So I think you can do the math and see where I'm going here. So if Cadence have 49% of something that even at Anglo's valuation of 600 million, that's getting over 300 million. That's huge. So at some stage, that valuation gap will close.
Yeah, indeed. Okay, excellent. Well, thank you very much, Alan, for bringing us up to speed on Cadence Minerals there, and of course, Marula Mining. And let's see what this year, well, let's look at this quarter first of all. This quarter brings a bit of a quiet start to the year so far, I think, this first week. But next week, when everyone's hopefully back at work, back behind their desks, we'll see what the news flow is looking like from various companies and, of course, the general economic sentiment. But thank you very much, Alan, and we'll talk again in a week's time.
Cheers, Mark. Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.